No matter how the economy looks, consumers will always have an appetite for something sweet. But when a company known for stability gets a big kiss from investors, can the stock still be as smooth as chocolate?
Okay, how does a formerly placid stock suddenly catch fire? Look at Hershey, the household name candy company that makes Reese's, Kit Kats, Almond Joy, Twizzlers, and a host of other brands, including, at least they distribute, Cadbury. I mean, isn't that incredible? For years, this stock felt like dead money to me. It's trading sideways around the $100 level. Hershey paid you a decent yield at those levels, but it didn't give you much in the way of share appreciation, as you can see, little wilderness here, okay? However, in the past few months, this thing has just completely taken off. I mean, I look at it every day, it goes up. It's really amazing. It surged from 105 at the beginning of the year to 138 today. This is a rocket ship, and that is a large cap stock move that's hard to believe. This is a placid stock. You don't get this kind of move on this. So what the hell's going on? Obviously, some of that strength had to do with slowdown worries. When investors think the economy's getting softer, they move their money into safe, consistent stocks like this one. But that is really only part of the story. There are plenty of packaged goods stocks that haven't moved at all, that haven't benefited from a perfect environment. Hey, Heinz, Kraft Heinz. Well, there's one. Jeez, isn't that incredible? And they put these ETFs together, and these stocks are so different. That's incredible. Hershey has something else going for it. The company's relatively new management team has been executing on a very smart turnaround plan for the past couple of years, and their moves are finally paying off. So tonight, I want to explain the recent run in Hershey. I love doing these kinds of pieces. I think it's really important for you to understand, how did that stock get somewhere? And I'm not sure the stock is worth necessarily owning at these levels. This is more of an instructional piece. Now, if the Fed is your friend, but there is a level where I'd be a buyer. But most importantly, I need you to understand the context of why stocks like this move. So why would Hershey's belong in your shopping list, if not necessarily in your portfolio right now? Okay, the turnaround started over 2 years ago, in March of 2017, when Michele Buck was made CEO. At first, the company hit a few speed bumps. You had everything from worries about the consumer banning candy, remember that period, to rising cocoa prices, holy cow, to a general sense that the company was rudderless, all of which conspired to keep a lid on the stock. And look, those fears were not groundless at all. But over the past year or so, Hershey has made a spectacular recovery, with the stock falling 48% over the last 12 months. Who said you can't make money with placid consumer packaged goods stocks? So how did Buck do it? First, even before she was promoted to CEO, Hershey had been gradually diversifying away from its core candy business, something Buck spearheaded back when she was the chief operating officer. The company made a series of acquisitions in the snack food space, like Crave, that's with a K, Jerky, and Bark Thins. We have some Bark Thins. I think they look really good. It doesn't look like Hershey stuff, you know? It looks like one of those like Kind bars thing or something. Once she was sworn in as CEO, she increased the pace of these deals. In December 2017, the company announced the acquisition of Amplify. Do you remember that? That's the maker of Skinny Pop. Then last fall, Hershey snapped up Pirate's Booty. Okay? Well, it's called Pirate Brands, but it makes Pirate's Booty. I actually like both of these. These deals were small, but all of these modest acquisitions have returned Hershey to, well, modest, low single-digit growth. Now, that may not sound like much, but a few years ago, people would have even been shocked to get even low single-digit growth from this company. As Buck told the big consumer analyst group of New York, or CAGNY conference back in February, she bought Amplify and Pirate Brands because their businesses with solid margins and mid to high single-digit growth. More importantly, she said, quote, these brands add additional depth and incrementality to our already amazing portfolio of brands, end quote. When you look at this, you know she's right. In other words, Hershey's now a diversified snacking company. It's no longer this, okay, with exposure to both sweet and savory rather than just a pure candy play. And that is how you grow a business. At the same time, Buck has been aggressively, she's been cutting unnecessary costs. Even as cocoa prices rose, Hershey's operating margin amazingly increased from under 20% to, in 2016, up to 22% now, or at least nearly 22. The company's used these savings to reinvest in the business, including bulking up their digital advertising. That's called a flywheel, or also a virtuous circle. What else? Well, Hershey gets 89% of its sales from North America, therefore not hurt that much by the strong dollar. Their international segment has been a problem. As recently as 2017, the overseas business was losing money. Buck has turned international around by focusing on the right markets, allowing the foreign division to deliver solid growth and much better earnings. Of course, the fact that Hershey's so domestically focused is one reason why the stock was able to roar higher last month when everyone else was panicked about the trade war, right? And the rest of the market was getting hammered. This is not a trade war stock. The opposite. At the end of the day, though, Hershey's most important business is indeed candy. This isn't the greatest industry at the moment, as younger generations focus on health and wellness. But Hershey doesn't need to take tons of market share in candy. It just needs to defend what it already has. Remember, this is a house of beloved brands, not only Hershey's, but also Reese's and Kit Kat and Icebreakers. I didn't know why these would be beloved, but people tell me they're beloved. Oh, my executive producer's daughter loves them. Oh, what a life. Oh, I guess when you do 3,000 shows, this stuff happens. All right. Almost 3,000 shows. Okay, anyway. So how does Hershey stay on top? With innovation. Take Reese's Peanut Butter, which was my mom's favorite, even though I hate them. This is #1 in the category by any metric you'd care to name. Company keeps people interested by periodically coming up with new variations on old thing. For example, they recently came with Reese's Thins, which is 40% thinner than a normal peanut butter cup. And by the way, it only comes in individual wrapped pieces, as opposed to these mass-produced things. And because consumers love the brand, it's easy for them to gin up lots of free advertising on, yes, social millennial media. The thing is, it took a while for the turnaround at Hershey to play out. A lot of people just gave up waiting. But now the stock's finally getting the credit for everything that Michele Buck has done right. When Hershey reported in April, the company delivered a terrific top and bottom line beat, 2% organic sales growth, translating into 12.8% earnings growth. The reason? Because management executed better than they predicted. And the company had a very strong Easter, which matters because they own the distribution rights for Cadbury. Now, this is one of my faves. You know that dark chocolate's actually good for you, someone told me. So, am I kidding? It's true, right? It's true. Okay. What?
Antioxidants.
It's antioxidant. What does that make your skin better or something? All right. How about all the snack brands that Hershey acquired in recent years? How about like the Skinny Pop, all right? This grew at an 11% clip, while taking about a percentage point worth of market share thanks to improved distribution and better shelf placement. We got to talk to those guys from Cramer, see how they're doing in this. Remember, they got the big bag. This gigantic candy company has more bargaining power versus the supermarkets than Skinny Pop ever had on its own. You know, that often helps us be at the end cap and stuff. The only piece of hair on the quarter was that Hershey decided not to raise its full-year guidance. Although I think they were just being conservative out of abundance of caution. The market clearly agrees with me because the stock immediately caught fire on the news, jumping from 117 to 122. It's been a rocket ship since then. But even though Hershey's got great management, there's a large element of right place, right time here. All of the company's purchases investors have given them a portfolio of salty and sweet snacks that's perfect for the particular moment. I want you to listen to what fellow snacking executive Dirk Van de Putte, the CEO of Mondelez, had to say when he came on our show 2 weeks ago.
I think the world rediscovered indulgence and mindfulness and enjoying what you eat and relaxing while doing it. And chocolate is a perfect product for that.
That was long. Good. More importantly, it's important to get this caught in your tooth when you're doing TV. More importantly, when everyone was worrying about a possible recession, Hershey was the perfect safe haven. A nice, consistent, domestically focused candy company with a solid yield, currently at 2.1%. Meanwhile, cocoa prices have just plummeted, and packaging costs have come down too. So has freight. And that's great because oil is the main ingredient in plastic, and oil prices have been crushed here too, down $2 today. My one concern with Hershey is that we're no longer worried about a recession. Sure, we think the economy is slowing, but you know what? That gives the Fed an excuse to step on the gas by cutting interest rates. If the Fed is your friend, then you really don't need this stock, particularly after a very big run, especially now that it's trading at 24 times next year's earnings estimates. Slightly more expensive than both Mondelez and Nestle, but also more expensive than Alphabet and Facebook. Bottom line, I salute CEO Michele Buck for masterminding this tremendous turnaround. But with Hershey at 138 and investors no longer craving safety, I think you should wait for a pullback before you pull the trigger. And if you already own it, you know what? Even though I just described the love affair, I think you might want to ring the register, at least on a small part of your position after this magnificent run. Stick with Cramer.
Coming up, this company wants to help consumers achieve the dream of home ownership. But what can their business tell home gamers about the economy at large? Cramer talks with the CEO of Quicken Loans when Mad Money returns. Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.